So good day everyone. So we are now in our second week in having the online class. So in the previous week we discussed about the introduction to accounting. So the introduction to accounting based on the book that we have followed, which is the book of Rafael Lopez Jr. entitled Fundamentals of Accounting. Introduction to Accounting comprises 3 short chapters. So the introduction to accounting is very important for you to be able to understand the accountancy program. Also, it would help you visualize the course that you have, uh, the course that you have chosen. So in chapter 2, I have given you an additional PDF file of my slides, which is the account titles. So these account titles are very important for you to be able to know in the first step of the accounting cycle. So in the accounting cycle, there are different steps in which you could not proceed to the next step if you have a hard time in the first step. So please always study, understand, do not memorize. In fact, the account titles are just self-explanatory, like the definition of land, building, payables, expenses. So those are self-explanatory. What you need to know is simply know the meaning, understand them so that you will know which account title to use. Know the categories, whether that is an asset, liability, equity, income, or expense. If it is an asset or a liability, know whether it's current or non-current. Aside from that, you must know which account titles belong to the balance sheet or the statement of financial position, and those that belong to income statement or statement of comprehensive income. So you would know that it's from the balance sheet if it is assets, liabilities, and equity accounts. You would know whether it's from income statement if it is the income account titles or the expenses account titles. So for this week, we will discuss about the chapter 4 of your book. This is the analysis of transactions and rules of debit and credit. So starting from this chapter, this is already the I could say a crucial part of the accounting cycle, because if you would not know this in the next chapter, you would have a hard time proceeding to the next steps. So this part, accounting 1, specifically journalizing, it is the most crucial in all other accounting subjects, because if you would not know this, most higher accounting subjects use journal entries. So if you do not know how to journalize them, you will have a hard time analyzing these transactions. So rules of debit and credit, this is the debere and the credere, the first step, journalizing. So before anything else, we must have a discussion, a brief history of accounting, a short history lang. So if you have chosen the ABM strand during your senior high years, you would know that the father of accounting is Luca Pacioli. So for those who chose a different strand, so please take note that the father of accounting is Mr. Luca Pacioli. It was in 1494 where he published his book Summa de Arithmetica, Geometria, Proportioni, et Proportionalita. So excuse the way how I pronounce, because actually I don't know how to pronounce this one. So it is about everything about arithmetic, geometry, proportions, and proportionality. So Mr. Luca Pacioli, an Italian mathematician and also a Franciscan friar. So the book that he published introduced the double entry system for bookkeeping and has served as the cornerstone for the future of accounting. So because of this, that is why he became the father of accounting. So we have different definitions of accounting. The first is the definition from Accounting Standards Council. So Accounting Standards Council, it is a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions. So please take note that we would emphasize the words quantitative information and financial in nature. Next definition is from American Accounting Association. It is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. So, we have here three INGs: identifying, measuring, and communicating. So, you identify whether which transactions belong to the business, then measure that one into peso amounts, then communicate that to the different users. Again, another emphasis is the economic information. So, it talks about financial in nature, and the information that you would get here would be used by the management or different users in making decisions and judgments. Next definition is the most common and most memorized by the students, is from the American Institute of Certified Public Accountants. So this is an art of recording, classifying, summarizing in a significant manner and in terms of money, transactions, and events, which are in part at least of a financial character, and interpreting the results thereof. So take note, there are four INGs: recording, so the way you record the transactions; classifying, so you classify them according to account titles and categories; summarize, so you must get the balances in a significant manner; and of course, in terms of money, so must be quantifiable transactions and events. So take note, all of these transactions are financial in character. What is most important that a certified public accountant must know is how to interpret the results to the management or to the interested parties. So we have here important points from the definition. So one is accounting is about quantitative information. So quantity. So it is more on having a unit of measure, must be measurable. Financial in nature, it talks about peso amount. So unit of measure in our country is peso, although there could be some transactions that will be recorded in certain currencies, especially if our home office is that from the other country. So mga branch accounting. And lastly, it must be useful in decision making. So take note, all information that you would get from the financial statements are very useful for a business whenever they would make decisions like branching out, um, taking or acquiring some loan, mga financing. So what is their economic condition and performance? So those information are taken from our financial statements. So components we have here: identifying. So this is the part wherein it is more on analytical. So you would analyze the transactions, whether that is included or not. Measuring, the technical component, because not all amounts presented in the problem are to be included. So in accounting 1, we are still having the basic measuring part. So what is given, most probably what is given in the problem is the amount that you would measure. But in higher accounting, so you need to identify how much should be recorded as cash. Is it cash on hand, or should it be in cash in bank? So that is for the higher accounting. Communicating, this is the formal component because this is how you would inform the different users. So you are done already with the financial statements. It is just on how to let different users understand what you made. In the four phases of accounting, we have from the common definition, which is from ICPA, we have the recording. So recording includes identifying, analyzing, and measuring. So if you have noticed, this is similar with the previous one, the components, but in the four phases, this is more detailed. So in the recording part, this is where you would journalize your entries. So in journalizing, you would use your general journal. So it would include identifying. What is identifying? You would identify whether that transaction should be reported for the business or for the personal transaction. So you must know whether that should be included for the business. Is it a transaction that is related to your establishment or not? Or should it be disregarded because it is your personal transaction? Next, analyzing. This is where you would analyze whether it is a debit or credit. So again, debit is value received, credit is value parted with. Next is measuring. It is just how you would quantify that into peso amounts. Classifying. This is the posting part. This is where you would use your general ledger. So in your general ledger, it is where you would sort or group similar and interrelated transactions and events into their respective kind and classes. So all cash transactions, place it in your T account for cash. All accounts receivable must be placed inside the T account of your accounts receivable, so on and so forth. Next is summarizing. So this is where it involves the completion of the financial statements and other accounting requirements as well. So it is from your trial balance down to your adjusting entries. So adjusting entries, it is somewhat like the journal entries, but these are made in order to adjust the account balances. Then you will prepare the adjusted trial balance, then the worksheet, then the financial statements. It also includes the post-closing trial balance, the closing entries, and reversing entries. So basically, step 1 is recording, step 2 is classifying, then the rest of the steps is summarizing. And lastly, interpreting. Interpreting is where it involves analytical and interpretative works. This is where you would analyze what you have made, which is the financial statements, and interpret them, then communicate it to whoever is the interested user or party, where the information that you would get or they would get from you would help them decide on what to do in their business and in their management. So next, let us differentiate bookkeeping and accounting. How do they differ? So bookkeeping, it is where you record systematically the business transactions in a chronological manner. So basically, when you would receive the receipts, record it, you would record and classify it in your ledger. You're doing bookkeeping, preparation of the financial statement. So how would you do that? It is systematic because it follows procedures and principles. So what do you mean by chronological order? So you must record these receipts based on date, order of the date. So if, for example, uh, you have transactions in January 2, record all the transactions in January 2 before you would proceed to January 3, then January 4, so on and so forth. You do not jump from, I just remembered today, August 31. I just remember that I have not recorded a transaction in February. So I will just suk. I'll just insert it after August 31. So as much as possible, you do not do that. It must be chronological in order. So accounting, on the other hand, it would require complete and accurate bookkeeping records necessary in the performance of its responsibility, which is the analysis and interpretation of the financial reports. So basically, after doing your bookkeeping, so you have made your financial statements, accounting would come in place. The last part of accounting would come into place or into the picture. So when you have the financial statements, you would analyze them, try to understand what does it mean. Then you would interpret and communicate that to the users if they want an information regarding branching out. So you would try to look at your financial statements. Is it feasible or not? So that is the important part of accounting, the interpreting part. But if you would try to look at it, accounting is basically composed of bookkeeping and the interpreting and communicating part. Because bookkeeping is the recording and classifying, which is included in the accounting definition. So simply stated, accounting involves bookkeeping and interpreting and communicating to the interested users. So bookkeeping is just a part of accounting. So aside from that, bookkeeper does the how accounting is done. So this is the mechanical aspects, while the professional accountant does the why accounting is done. It is the analytical and interpretative aspects of accounting. So anyone can be a bookkeeper so long as you are a graduate of the accounting or accountancy program, but not anyone or not everyone can become an accountant. You must be a passer of the board so that you will become a certified public accountant, and you must know how to analyze and interpret the financial statements. So business transactions and events. So why is there a need to know these business transactions and events? Again, you are only to record transactions and events that is or that are related to the business. So only those that are accountable should be recorded in the books. So what do you mean by accountable? So those that can be quantified or expressed in terms of unit of measure. Those that are not accountable and is not a transaction of the business should not be recorded in the books of the enterprise. So business activities that are accountable, this is what you call business transactions and events. So these would affect assets, liabilities, and equity. These are the accounting elements or accounting values, the three, the assets, liabilities, and equity. And these business transactions and events are further divided or categorized into two. We have the external transactions and the internal transactions. So when you speak of external transactions, this involve exchanges of economic resources by a business enterprise with another business enterprise. So for example, we are company A. We have a transaction with company B. So that is an external transaction. Internal transaction, on the other hand, these are transactions or events that happen or take place within the business enterprise only. So for example, your operations of your business, for example, you have a manufacturing business. So from purchasing, when you already have the raw materials, your internal transaction is the conversion of these raw materials into finished products. So it's just within the company. So also another thing that you would remember in business transactions and events is number one, for every value received, another value is given away as an exchange. So it's a give and take. If you will give, you will also receive something. Again, it's a debit and credit transaction. Debit is value received, credit is value parted with. So if you will give something, you will also receive something. These values are measured in terms of pesos, which are presumed to be equal. So equal, same amount. So we are here in the Philippines, it must be measured in terms of pesos. The amount of value received will always equal with that of the amount of the value parted with. Hence, debit is always equal to credit. So again, debit is value received, credit is value parted. So we have here an example. One day, Anna opened her Facebook account and saw the barter page. She saw Lila's post who wants to exchange her table for an electric fan. Diba? It's common karon barter. Buhol barter ba na? She has an extra electric fan, so they met and did the exchange. So my question is, for example, we are Anna. What did we give? What did we give? It's electric fan. What did we receive? Table. So, Anna received a table, so this will be her debit. While she let go of the electric fan, this is her credit. So, again, debit is value received. So, what did we receive? We are trying to meet with Laila. We want to exchange something. So, we have an electric fan. We want to exchange it for a table. So, they met. So, she gave the electric fan to Laila while she received a table from Laila. While on Lila's point of view, so Lila received the electric fan, this is her debit, while she let go of the table, this is her credit. So if you have noticed, ma'am, duha ka entries, we will prepare 2 entries, it depends on the point of view. No. Always think of you are in the business point of view. So for example, Anna is the business here. We are Anna. So our entry would be, we will have a debit of table and credit electric fan. But if we are Laila, she debited electric fan and she credited table. So opposite sila. Because what Anna has received, it is the item that was being let go by Laila. Another example. One day, I wanted to go to the mall. I went out and waited for a tricycle. Here comes Nong Isko. He let me ride his tricycle and I paid him my fare of 20. So, in our point of view, what did we receive? Ma'am, we received nothing. There's no product. There is. It's a service. So, the service of having our safe arrival in the mall. What did we forego? Our payment, the fare of 20 pesos. So, in our point of view, we received the service of safe arrival. So, this is our debit. So, what is our credit? The payment of 20 pesos. While in Nong Isko's point of view, what is his debit? He received a payment. While what did he let go? His services. So this is his credit. Iyang serbisyo. So now we are what we have been doing for the examples, that is actually the start of the debit and credit without the format. So how is the presentation of the entries being made? So write debit, then credit, then an explanation. But take note, So I'm having a legend here. If you will see this sign, it means there must be indentation to separate the debits, credit, and explanation. Must be 5 spaces so that it has a clear indentation. Don't do more because it is not nice to look at. So kaning 5 spaces, it is just my prerogative. I don't allow students to just have a single space or 2 spaces because there are some students who have a different kind of handwriting. It's not clear whether it's nagtupong or wala. So look at the space between debit and credit. So first line is always the debit. So debit does not require only one line. So you can have more than one debit. You can have more than one credit. But in this presentation that I have shown you, one debit and one credit, that is what you call simple or single journal entry. But if you have more than one debit, more than one credit, or both have more than one, so that is a compound journal entry. But let's stick to the basic for now. So we have one debit and one credit. That is a simple journal entry. So if you have noticed, after writing debit above, so kaning debit kinadaplin na ni ha, you will write it in the edge of your left side in your journal. So in the next chapter, I'll teach you how to use that with the money columns. So you have at least 5 spaces to have a clear indentation. Then you will write the word or the account title for the credit. So if you have noticed, what is this XXX? That is for the amounts. That is where you would see money columns. So basically, in the journal, you have 2 money columns. For the first money column, that is where you will write all debits. For the second money column, that is for your credit. So if you will write it in a yellow paper or in a yellow pad, I will only see 2 money columns. 2 columns for your amounts. So first column is debit, second column is credit. So dapat magtupong. All your debits will be in line with each other regardless if which journal entry you are making. All credits are in line with each other. After the credits, again, indent 5 spaces from your credit account title. Then you will write the explanation. So the proper format is that you have an explanation, but for discussion purposes, usually we would use number sign. So what is a number sign? Most students, especially the millennials, would call it a hashtag. Take note, we are not using the social media. It's not a Facebook, it's not a Twitter. That is not a hashtag, but that is a number sign. Some would say it's a pound sign. So it's acceptable because, take note, we are in the accounting parlance. So do not use the word hashtag. So what is this the symbol with 2 underline brackets? So it uses the money columns in the journal. There are 2 money columns. First column for all debits and second column for all credits. So again, only 2 columns for the money columns. So we have an example here. Bought a computer for cash, 20,000. So what did we receive? A computer. What did we forgo? Cash. So, guide questions. Before, this is for the recording part. Who bought the car? So, in our thinking, this is for the business. Ano, that car, computer. Sorry. Who bought the computer? It's us. What is it for? For the business. So, that's for the business. What is the value received? So, what is the item that we have received? The computer. We bought it. We went to ICM, Thinking Tools, or P&J, or Asa pa na diha. So, we received the computer. What did we forgo, or what did we part with? Cash, our money. So, what is the peso equivalent of these exchanges? That is 20,000. That is the measuring part. So what we are doing is already debit credit, but we did not yet use the format. So you first identified, is it a business transaction? Yes, it's for the business. So we analyze what is the value received and what is the value parted with. Next is the measuring. So let's now start to discuss what are the common and basic transactions in accounting. Basically, it's just nagbalik-balik. There's just a small, when you would encounter journal entries, there are only few basic transactions, but there will be just added twists. Like for example, more than one debit, more than one credit, a combination of the basic transactions. So there is inclusion of an interest. So you must master, again, do not memorize, master how these debits and credits are done so that you would know how to do them. And even if you just close your eyes, if someone would ask you, you would understand and you would give them an answer. But basically, how you would do it is you would think of what did I receive, what did I part with. And another technique, if you could recall my discussion or the accounting equation, it's assets equals liabilities and equity. If you would know that formula, especially the expanded accounting equation, it's easier for you to make the journal entries. But before I'll teach you the shortcut, I'll teach you first the basic on how you would do journal entries following the proper procedure. So transaction 1. Bought a delivery vehicle for cash, 600,000. So this is now the part wherein you should be able to master the account titles that I have given you, because not at all times that what is given in the problem that is the exact account title that you would use. So you would still identify what is proper. So let's try to analyze. Bought a delivery vehicle for cash. Take note that the transactions that I will give you, it's all for the business, so that is already established. These are business transactions and events. The question is, what did we receive? What did we forgo? So what is our debit and what is our credit? So in transaction 1, what did we receive? Nipalit tag delivery vehicle for cash. So we received the vehicle, the delivery vehicle. What did we forgo? Unsay nawala nato? It's cash. So in this transaction, the value we receive is a form of an asset, which is delivery car. So we will call this as delivery equipment. And the value parted with is another form of an asset, which is cash. So how to present it? So debit delivery equipment, 600,000. Credit cash for 600,000. So we have already identified it's a business transaction that is already established that all the problems I will give you, these are business transactions. Except for the withdrawal, you will know that later. Then we analyze what is the debit, what is the credit. Then we place the value, we measured it. We wrote 600,000. So if you have further questions, you could post your comment on the medium that we used for discussion. So another transaction number 2. Sold an old computer for cash, 20,000. So, namaligya daw ta sa tong computer. What we purchase, probably we have already an existing computer, then we want to sell it. We want to dispose it. So, what did we receive? Upon selling, take note, namaligya ta, we are selling. So, we disposed it. So, we already know that's our credit. We forgo of our computer. But what did we receive? We received cash. Ibayran man ta. So in this transaction, the value we received is a form of an asset, which is cash. And the value parted with is another form of an asset, which is a computer. We call this office equipment. So take note that there is an emphasis on what category of account title is these are. So it's both assets. So you must also know the classification. That is very necessary, especially when you would make the trial balance in the financial statements. So how would you present it? So debit cash, 20,000. Credit office equipment, 20,000. The number sign, so that is the number sign that I have discussed to you during the format or the pro forma entry. So again, that is not a hashtag, but it is a number sign or pound sign. Next. Transaction 3. Bought laundry supplies on credit from SMCT Davao, 35,000. So take note of the word on credit. What is on credit? Meaning inutang. So I want you to differentiate if it's a cash transaction or a credit transaction. If the problem is silent or does not talk on any on credit, on account, or with a promissory note, so meaning that is a cash transaction. Meaning, by default, if there is no further information, that is a cash transaction. But if it would state on credit, on account, you must further clarify it. If is it with a promissory note or a document or not. Why? Because your payable account has two. We have accounts payable and notes payable. If it is just a verbal promise to pay, or meaning there is no document that would prove that you have an utang, then that is accounts payable. But if there is a promissory note or a memo that indicates that you have an utang or a credit, then that is a notes payable. So, bantayan ninyo. First is identify whether that is a cash or a credit transaction. If it is a credit transaction, further classify. What was it done orally, verbally, or there is a document that would evidence your transaction, your credit transaction. So in this case, let's go back to the analysis. You have bought laundry supplies on credit, meaning nangutang ka. So what did you receive? Laundry supplies. So what did you forgo? A credit transaction. Ma'am, wa man may nagpagawas og utang. Take note, supposedly this credit is in lieu of your cash. So nagpagawas ka ana. But eventually you will pay. That's why your credit is a liability. Also, it's for it to be easier for you, so this is the shortcut. Going back to your accounting equation, you will follow its normal balance. Assets is on the left side, normal balance is debit. Liability and equity is on the right side, normal balance is credit. So if you want to increase those balances, meaning nangutang man ko, napunan akong utang, or I will open an account, a credit account for SMCT Davao, how would I record an account? Ana, what is the normal balance of a liability? Take note, accounts payable is a liability. So, you will credit it. That is the shortcut, but you will further understand that later on. But basically, what you have received is supplies, laundry supplies, then you would record a liability, which is accounts payable, since it was just an oral promise to pay. So how would you present it? So laundry supplies for 35,000, accounts payable for 35,000. Next transaction. Transaction 4. Paid our account with SMCT Davao. Take note, ganihan, nangutang ka. But we will pay. So we opened a liability account, which was a credit of accounts payable, 35,000. How would you pay it? How would you close that balance? So, go to its normal, to its opposite balance, diba? Atong i-credit. For it to be closed, you will debit it. So, get back. Atong bawion ang atuang oral promise to pay as a cancellation of our account. So, that is what we receive. So, you close your liability, so debit accounts payable, then Take note, you paid. What did you forgo? It's cash. So, right? Credit cash, 35,000. Transaction 5. Bought an office table on account from MCOR, 25,000, and a promissory note was issued. So what is this? Is it a cash transaction or a credit transaction? So it's a credit transaction. Is it verbally done or there is a document given? So there's a document. So this is not an accounts payable but a notes payable. So what did we receive? Oh, we purchased an office table. So that is what we have received. That is our debit. So what is our credit? Uh, we gave them a promissory note. So what is that? It's a notes payable. So written promise to pay. So debit, office furniture and fixtures for the amount of 25,000. Credit, notes payable for the amount of 25,000. Next, paid our account with MCOR 25,000 and get back the promissory note we issued. So when you would issue promissory note, be sure that you will take back the promissory note so that ma-cancelled na ang atong utang, because if they still have the document, wala na to nabawi. They might think na we still have a balance with them, or there are times nga tuar na nila or they have a copy, be sure that it is stamped with paid. That is an evidence nga gibayaran nato. So what did we receive? We took back our promissory note. So that is a debit. Close our balance sa notes payable. So ato ang i-debit notes payable 25,000. What did we forgo? Unsay atong gipagawas? So we paid our account for cash 25,000. So credit cash 25,000. Next, transaction 7. Received cash 15,000 for services rendered to a customer. O services rendered. Take note, if we have rendered a service, that is already our form of income. No. Some would be confused of what is this income, what is this cash. Why? When you would record the transaction, you would say you have received income. No, you have not received income. What is the actual receipt? What did you receive in reality? Cash. So, you debit cash. But what did you forgo? You could not say that you received something without doing anything. So, that is our services. So, what is the proper account title? Service income. Some would say, common mistake. This is the common mistake, ha? That service income should be debit because that is what we receive. No. Income may be in the form of cash or accounts receivable. Why? Pwede ba utangon atong serbisyo? But service income is not the account title that we have received. It's cash or a receivable account. What did we forgo? Services. In what form? That is our service income. Why? It's our services rendered. What is the proper account title? Service income. That's why I said you must be familiar with the account titles so that you will not be confused. So debit cash, 15,000. Credit service income for the services that we have rendered, 15,000. Transaction 8. Rendered services to a customer, 12,000. The customer made an oral promise to pay. Oh. Another thing to make bantay, to look out for, try to look at if who is the one who made the credit. Are we the ones crediting? Kita ba ang nangutang? or kita ba ang giutangan? My example before is we are the ones who bought it, kita ang nipalit, pero giutang. So meaning, we are the ones who did the credit transaction, kita ang nangutang. In this case, we rendered services, pero our customer did not pay us. They are the ones who made the credit transaction, meaning sila ang nangutang. So, if kita ang mangutang, that is a payable. But if kita ang giutangan, that is our receivable. We have to receive something from them, which is cash. But unfortunately, they made a credit transaction, so we will record it as our receivable. So, we have already know that we must identify whether it's credit or cash, but prior to that, we must know whether that is a payable or receivable. So in this case, this is a receivable. Identify whether whether it was done orally or with a document. So it is stated in the problem that customer made an oral promise to pay. So if it is oral promise or verbally done, so that is accounts receivable. So, what did we receive? Their promise to pay. So, oral promise to pay. So, that is accounts receivable, 12,000. But what did we forgo? We rendered services. So, that is our service income. Muna ato ang giwala. We do not credit cash. Why? We are the ones rendering services, but we are the ones who will pay? No. If you will credit cash, meaning nag-let go ka og cash, nagpagawas ka og cash. But in this case, no. We rendered services, nagpagawas tag serbisyo, so we recorded it as service income. So what should we receive? Their promise to pay, which was done orally. So debit, accounts receivable for 12,000, credit service income for 12,000. Transaction 9. Collected the customer's account. So, this was in relation to the previous transaction. So, di ba, we rendered services for 12,000, but the customer did not pay. They only made an oral promise to pay. That was our accounts receivable. In this case, they will already pay. So, what did we receive? Cash. They paid us. We received cash. So, what is our credit? We need to close the balance of their accounts receivable. Atong iuli ang ilahang promise to pay. So, credit accounts receivable, 12,000. Okay? Next, transaction 10. Rendered services to a customer, 16,000. The customer gave us a written promise to pay. So, we rendered services. You already know, every time we render service, nag-forgo taog service, automatic there is a credit of service income. But what is our debit? So, we did not receive any cash, but their promise to pay lang. The question is whether it's oral or written. So, it's written. So, if it's written promise to pay, that is notes receivable. So, automatic, we receive the written promise to pay, debit, notes receivable, 16,000. Then, credit, service income, because we rendered services, nagpagawas tag serbisyo, credit, service income, 16,000. Next. Now, collected the customer's promissory note. This is in relation to the previous transaction. So, we collected the promissory note. They paid us and they took back their promissory note. So, if they paid us, what did we receive? We debit cash. So, 16,000. Since we will return to them the written promise to pay, their promissory note, we will close their balance of notes receivable, 16,000. So, this should be credited. So, debit cash, 16,000. Credit notes receivable, 16,000. So, basically, transactions 8 and 10 are similar. What is the difference is the other one is oral promise to pay, while transaction 10 is written promise to pay. Transaction, there is a correction that is not referred to transaction 9, but that is referred to transaction 10. So, while transaction 11 and 9, they are similar, but transaction 9 refers to the collection of an oral promise to pay, while this one is a collection from a written promise to pay of a customer. But pareho ra silang credit transaction. It just differs on the account title that you will use. Next. Mr. Tyrone D. Gutierrez invests cash of 1 million in the business. So you must know this because this is the common first transaction in accounting 1 problems. So before you will start a business, you will invest. So how would you record it? What did the business receive? Take note, Mr. Tyrone D. Gutierrez may be the owner, but in our point of view is in the business. If you could recall the principle of which principle, if you could recall? Separate entity concept or the basic, in the business entity concept or assumption. Meaning, the owner is separate with the business. They are different entities. So in the point of view of the business, when Mr. Gutierrez invested, the business received cash of 1 million. So what should be our credit? So every time that the owner would invest, this is his capital. So debit, cash, 1 million. Credit, Gutierrez capital, 1 million. So this is an owner's equity transaction. So normal balance of an equity is credit. For you to have a balance of your credit, a positive balance, so you would record the transaction following its normal balance of credit. That is Gutierrez capital 1 million. Next transaction, Mr. Tyrone D. Gutierrez withdraws cash of 25,000 from the business for his personal use. Take note, he invested a while ago, but then he decided that he will use some money for his personal use. Meaning we have to take it from our business because he will use it for personal. Again, separate entity concept, separate them. So we have a specific account title every time the owner would withdraw. It's either drawing or personal account. So drawing is a deduction or reduction of the capital of the business. So if you have recalled, capital or owner's equity as the normal balance of credit. So credit. So magpuno tag amount, ato ang i-credit ang account. But since this is a withdrawal, our purpose is to reduce the amount of the capital. So we will not write it on credit, but on debit. Kay kuhaan man nato. So kuhaan nato. So debit, Gutierrez personal, or you could use Gutierrez drawing, or some teachers like ako, I will use Gutierrez withdrawal or drawing. So it depends on the chart of accounts. So that is your debit for 25,000. What did the business forgo? Unsay gipagawas sa business? Cash, kay withdraw man sa owner. So credit, 25,000. Again, this transaction is also a common mistake of the students. Kay mabali nila, they would be confused of whether personal account is on the debit or credit side. Take note that although drawing is an equity account, it is somewhat like a contra equity account because it would reduce the balance of your owner's equity. So for you to be able to reduce the balance, do not follow its normal balance sa equity. Diba? Normal balance equity is credit. So, para makuhaan or for you to be able to reduce that amount, so you will write personal account on the debit side. So, recording of expenses. I believe this is the last transaction. Paid salaries to employees for the month. So, salaries, it's an expense. But don't think as an expense, that is the amount that we have forgo. Just like the income. Lahi na siya. The account that you have forgo is not salaries. But, unsa may imong gibayad sa imong employees? Cash. So, credit mo is cash. What did you receive from your employees? Their services. Ilahang serbisyo, but we do not record at salaries income because it is not our income, it's our expense. But what did we receive from them? It's their services rendered. So, how would we record that one? Go back to your definition sa account titles. That is salaries expense. So, expense that we have received is debited. So, this is the benefit we get from the services rendered by our employees. Then, credit, gibayran na to sila, nagpagawas tag cash, 20,000. So that's how you would record expense. Another common mistake, sayang kaayo, why? Usually in one problem, we could give 4 expenses, 3, or even 6, 7. Mabali lang. Debit cash, credit salaries expense, debit cash, credit utilities expense. Take note we are paying for our expense. So, we do not receive cash. So, we do not debit cash. We should credit cash. Nagpagawas ta kay we are paying. So, what did we receive? The benefits from them. In what account title should you use? So, if that pertains to salary, so that is a salaries expense. If that pertains to communication expense, or utilities, electricity, utilities expense. If that is the repairing of a certain item in the office, repairs and maintenance, so on and so forth. So again, master the account titles. That is very important. Master the categories, the classification, whether that is an asset, liabilities, equity, income, or expense. That is very helpful when you would make the journal entries. So these 14 are the basic and common transactions. So you must master them. Do not memorize. Master them. Understand how to analyze, how to debit, how to credit, so that it will be easier. If you will memorize, take note, we are still in the second chapter, second part of our module. Who knows, there are still a lot to memorize in the further part of the semester. So, mabuang na mood, and this is not your only subject. Again, this is not a memorizing subject. It is an analysis subject, so you must learn how to analyze. So, if you have more questions, again, post your questions on the medium that we have used. So, for the meantime, we use the Facebook page, but some were not able to connect pa sa Google Classroom. That's why we use the Facebook page. But later on, we will transfer sa Google Classroom. So, I think this week, Google Classroom na jud ta. So, let us discuss about key accounts. This is useful for ledger. So, ledger is basically your T account. Without the money columns ang T account. Again, with the money columns, we will discuss that for the next part of the semester na, later on semester. So, on the left side, so, di ba, letter T na siya. Left side is where you will find your debit. So, what would happen is all the entries that you have made, so you have created the entries, you will transfer that, you will classify that in your ledger. So, we are doing posting. So, all debits are to be written on the left side. All credits will be written on the right side. Again, journalizing is done chronologically because that is the bookkeeping part. The classifying, which is your posting, it is also done chronologically. Do not use or do not do posting where you will find first all cash. Then you will write it in your T account. Then find again accounts receivable, then T account. No, what you would do is your entry in January 1, write the debit, write the credit on in your ledger. Then proceed to the next date, write the debit on your ledger, write the credit on your ledger. Then proceed to the next date. What is the debit? Write it on your ledger. What is the credit? Write it on your ledger. So I'm telling you this because the common mistake of the students is the arrangement of your ledger is based on your chart of accounts. So what is the chart of accounts? It's the list of account titles that you will use. So usually, the arrangement of the chart of accounts is from assets, liabilities, equity, income, and expense. So meaning, your ledger is also arranged that way. So common mistakes of students is the first T account is cash. What they would do is they would look at their ledger. They would look all for the cash transactions. Then transfer them to their ledger. Then look for all accounts receivable. Transfer them to the ledger. Next, look for the inventory. Transfer it to the ledger. That's wrong. It must be done chronologically. And there is a tendency that you will commit mistake if you will do it like that. Ano man, pwedeng masipyat mo instead of debit, nabutang sa credit. Instead of this date or instead of this amount, lahi nga amount. So, do it chronologically. So, it is a systematic manner. Diba? If you could recall my discussion in the previous slide, bookkeeping, systematic and chronologically done. And what is included in the bookkeeping? That is recording and classifying. So next, account balance. So let's go back to the T account. So what you would do after posting that in your ledger, so for example, mauni siya. You have debited 25,000, meaning the business, siguro investment nimo, nakadawat og 25,000 ang business. Then, you paid, you purchased something, credit of 10,000, then another purchase, 5,000, then, you rendered services, you collected 10,000 on the debit side. So, total debits is 35,000, total credits is 15,000. So, you must do the footing. Meaning, i-total ang debit, i-total ang credit, then get the final balance. So, subtract. 35,000 minus 15,000 is a total of 25,000. You must double rule your final balance. What is this final balance? This final balance is the account balance. Meaning, that is the balance of your cash. Why is this important? Because this balance will be transferred to your trial balance. So, trial balance is the summary of all account balances found in your ledger. So, basically, if masayop ka sa journal, masayop ka sa ledger. If you will have a mistake in the journal, debit and credit, there is also a corresponding mistake in your ledger, the way you transfer. If there is a mistake on that, automatic, there is also a mistake in your trial balance. So, it will never be correct that you are perfect in the trial balance but you have mistakes in your journal and ledger. Isaray pasabot ana. It only mean you are cheating, you are copying. So, if we are having a face-to-face or even during our official exam is based on real time. So, meaning online mo during the official exam. So, that is the policy of the school. Any blended learning that you will get, it's still real time. Kaya impossible ang official exam nga ipadalang. In fact, it's done real time. And ay deadline. So 3R, so be sure of official exam, you must have a stable internet connection. So even our classes, kay if dili, so mag-anhian ra gyapon mo tagbilaran every other day to get a copy, so useless. So we're done with the account balance. So 20. So here the accounting equation. So hmm. So basic accounting equation, meaning this is for the balance sheet or statement of financial position. We have the formula assets equals liabilities plus equity. So assets is on the left side, which is the debit, while liabilities and equity is on the right side, which is your credit. If you will increase your balance of the asset, take note, normal balances ni siya ha. If you will increase or you will have a positive balance of your assets, it must be on the debit side. If you want to lower down the balance or to zero out the balance of the asset, you must have a credit amount. While on the liabilities and equity, if you will increase or if you will record a positive amount, you must have a credit side. If you will lower down the balance, so imuhang kuhaan ang balance, imuhang i-debit. Same with your expanded. Ang napuno raman is expenses and revenue. That is for your income statement account. So if you have noticed ganiha, when we recorded the expenses, di ba naka-debit ta? Na we give salaries to our employees, what did we receive is the benefit or the services they have rendered to the business. So we are recording an expense account, so ato ang i-debit. That is the normal balance. While on the revenue, when we rendered services, that is in the form of our service income, so we credited revenue, meaning we have a positive balance of our revenue. Naatay record sa revenue. So that is the accounting equation. So rules of debit and credit. Mo ni ang gingon ganiha mga short, mo na ni ang rules. So assets, if you want to have a normal or increase the balance of your assets, follow the normal balance that is debit. If you want to lower down or to decrease its balance, you will credit. Liabilities, if you want to increase the balance of your liabilities, follow the normal balance, which is credit. Well, if you want to lower down or decrease the amount of your liabilities, you need to debit it. This is the shortcut. Pili na tong, if di mo ganahan mag-analyze, what did we receive, what did we forgo. So, kani inyo ha, what is the normal balance? That's why I told you, you must be able to identify which account titles to be used and what is its category. Owner's equity, the normal balance is credit. So if you want to increase it, naka-credit ang capital. If you want to decrease it, i-debit inyo. So what would affect your owner's equity? So, say, what is the normal balance of owner's equity? Is it debit or credit? It's credit. So the items that could increase your owner's equity, it's on the credit side. Investment by the owner, so you will record it as capital. The income or the revenue from your income statement, so that would increase your equity. But what would decrease your equity? So withdrawal and expenses. So expenses, but basically, what would be reflected in your owner's equity is the total naman sa imong statement of changes in owner's equity. Not the statement of changes in owner's equity, but your net income or net loss. So, meaning revenue or and expenses. So, supposedly this is loss, kaning expenses. Meaning, loss happens when expenses is higher than your revenue. While income happens when revenue is higher than your expenses. So your drawing or your personal. So this talks about the withdrawal. Normal balance, although this is an equity, but take note, this would reduce your equity. Normal balance of drawing or personal account is debit. It would increase if you will debit it. While if you would decrease your withdrawal, you need to credit it. Income or revenue, normal balance is credit. If you want to go back to the expanded accounting equation, normal balance is credit. If you want to increase or you have a positive balance of your income or revenue account, so credit. If you want to decrease that amount, so that is debit. Expenses, normal balance is debit. If you want to increase, debit sad ka. If you want to decrease, that is a credit. So we have here an example of a chart of accounts. So before you solve a problem, usually kung kanang full-blown problem na sa accounting, you will be given a chart of accounts. Chart of accounts is the summary of the account titles to be used. So the usual presentation is you'll start with assets, liabilities, owner's equity, income, and expense. But this is just for discussion purposes. I classified them. Dutangan ako, assets, liabilities, owner's equity, and income and expense. But in reality, there's no classification. You'll just enumerate them. So cash in bank, office supplies, inventory, accounts payable, Bartolome Pozon capital, Bartolome Pozon drawing, professional income, and salaries expense. So I'll teach you how to use the chart of accounts for your folio in the next few chapters. So this example is where I will let you try to solve the problem. Be sure that when you would solve the problem, you will use the account titles presented in the chart of accounts. Then, since in this video I'm using recording slides, so I could not show myself in solving the problems, I might give you a different video for the answers of this one, or I could simply give you the answers. So try to solve this. What is your debit and what is your credit? So next transaction, we have 6 transactions before we'll end the video. Again, the answers will be given not in this slide. Okay, for the transactions. Okay, so that is the end of our discussion for this week's lesson. So again, for the answer of the example that I have given you, I might post it in our Medium, either Facebook page or the Google Classroom, or I might show you a video. So again, my audios and videos are just given to you for the sake that it would aid you understand my slides. So what is officially presented as part of the module are the PDF which shows the slides of my PowerPoint. The audios are just my aid for you to make things easier. That although you can buy book in the dean's office, I'm not sure with a book, but you could just inquire, just message the department page if there is, or in the National Bookstore if there is. So anyway, so if you want to play again the slides, you just keep on playing, try to understand. For the next chapter, it is about journalizing. So what we are doing in this chapter, kanatong gi-discuss karon, we are already doing journalizing but without the money columns in the folio. So without the proper journal presentation. But we have already discussed journalizing. Then posting, I already gave you a little bit of an overview. So basically, the next two chapters are discussed briefly here, but don't worry, we'll still further discuss the details of that in the next weeks. So thank you and bye.